The pound has been rallying strongly in recent days on hopes that we could be moving towards a Brexit deal. Both sides have been talking up the prospects of a deal, talking up the fact that there could be some closer alignment towards an agreement. Now, there still is a long way to go. A lot of the finer details still need to be agreed, and a deal still needs to be agreed as well that will have both the EU Parliament and the British Parliament on board, including the DUP, which has been very important in striking a deal up until this point. But that optimism is growing and is being reflected in the markets currently, as you can see in the chart here in the pound-yen pair. And this is a currency pair, it's worth noting as well, that doesn't just represent Brexit optimism, but also risk optimism as well, because the yen is that safe haven currency. So we've really seen this strongly propel higher over the last couple of weeks. We're now approaching that 140 level, which has historically been a notable level of support. But what's really interesting about this currency pair right now is that earlier on in this process, we did see the Ichimoku cloud broken by the price action there. Which is seen as a bullish indicator. When price is trading above the Ichimoku cloud, that's bullish. When it's below, that's viewed as bearish. Now, after the initial rally, we did see it come back and test the Ichimoku cloud from above. That held up. That was around the 50 fib level as well. So the fact that these two levels coincided was really interesting as a possible rotation point, which actually did turn out to be accurate. Now, following the most recent rally, we've seen the lagging line follow through the cloud. Now, this is seen as a confirmation indicator when the lagging line does do this. And that is now taking us up until these 140 levels. Another thing that's really interesting about these charts as well is that it seems to have these big 400 pip blocks that are acting as these major levels of support and resistance. We're approaching 140. Currently below here it was around 136. Below there it was 131, 132. And above the 140 level, 144 is what strikes me as being a really interesting level of potential resistance. The one note of caution I think we should throw around here is the fact that the negotiations are still happening. Anything can happen before the end of the day, let alone before the end of the week, that can flip sentiment on its head. But what we're seeing from the charts and what we're seeing in the markets is that optimism is building at the very least towards an extension where the outlines of a deal can be agreed, or potentially surprisingly towards an actual deal itself, which is widely viewed as being a very, very bullish sterling event, and could see 140 taken out, but 144 come under considerable pressure and potentially even further. But again, that is very much on the optimistic end of the scale, given how many details still need to be ironed out and how little time we actually do have for these details to be thrashed out. So I think there's still a long way to go in these negotiations. I think we're hoping that by the end of the day we will have more concrete news on what's being taken to the European Council summit on Thursday and Friday, and whether the prospects for a deal this week are actually real. Already we're hearing noises that there could be an emergency EU summit later in the month. But that doesn't obviously solve the conundrum that Boris Johnson have, as is in that his hands are tied by Parliament to request an extension over the weekend should a deal not be agreed, which is one of the reasons why Parliament is sitting on Saturday to discuss what Boris Johnson has brought back. Of course, they could offer permission to delay that extension, being one potential option here. But again, time is fast running out for that 31st of October deadline. And what we're seeing today and what we've seen in recent days, and what I expect we're going to continue to see in the days in the next 2 weeks ahead, is that the pound is extremely volatile and also very, very sensitive to any commentary coming out of Brussels and also London. Michel Barnier's comments being a key part in this in terms of how the pound is reacting. He's spoken publicly, or at least had comments released over the last couple of days, and each and every time we have seen very sizable moves in the pound on the back of that. And so far they have been positive, with a few sprinkles of negativity along the way, which again is why we're trading so much higher in the chart and why we're now approaching that key pivotal 140 level.